Carolina. Well, we're so excited that you were able to find some time. Today, I wanted to talk about bank statement loans. I've had a couple clients that have benefited from them, and I feel like they are gaining popularity, but I feel like lots of people also don't know about them. So that's our topic of discussion for today. But before we get into that, Hailey, what is your temperament on the market, interest rates, where we see things going?
Yeah, really great question. So rates are for most borrowers between 6.5 and 7%, and it really depends on your loan program and your loan qualification, of course, exactly where on the scale you'll land.
Sure.
But then also rates are following inflation. Inflation continues to be high. Interest rates are going to continue to be high, and so yeah, we're likely to see that in the spring market. We're hopeful for some new economic reports that may favor the Federal Reserve to cut interest rates maybe in the summer, maybe all the way into the fall. We'll see what happens, but that's kind of our temperature on the market right now.
Yeah, I honestly feel like it's so hard anytime anybody asks me where interest rates are, where they're going. It's kind of like there are so many variables right now. It's just hard to say. And so, really, all we know is what is right now. And it like 6.5 to 7 is a little lower than because for a while we were back up in the low sevens. Yeah.
Yeah, it's been a little bit of a roller coaster. It depends on the day. I mean,
Sure.
like one day it was over 7, one day we're under 7. Yeah, it really depends.
All the fun things, but we're just trying to make it work.
Yeah.
Okay, so can you tell us first, like, what is a bank statement loan?
Yes, super great question. So typically a bank statement loan is going to be for self-employed borrowers who are not showing any or very little income on their tax return. So a traditional conventional loan would use self-employed borrowers 2 years of tax returns. And if you've been in business for more than 5 years, sometimes you can just use the 1 year average, recent year of tax return. Now, a bank statement loan is a nice alternative to the businesses that show a lot of cash flow, but don't want to show a lot of income on their tax returns, maybe a ton of write-offs and those types of advantages that you want to take advantage of course, part of being a business owner.
Yes.
But the downside is qualifying for financing. And so that's where the bank statement loan comes in. And I think we've just seen a big uptick in self-employed borrowers. Okay, the sun just came out, so if I just started glowing, I just like the sun is right there. Anyway, yeah. So most of the time, I tell my borrowers, ask yourself a few questions. Are you self-employed or are you 1099? There's like a fine line between those. We have options for both. And then, have you been in business for at least 1 year, and in the industry you're working in for at least 2 years?
Okay.
Those are kind of minimum thresholds. And then, do you have positive cash flow? Because you're carrying a lot of debt, that can be another hurdle to jump. But if you're showing good cash flow on your month-to-month bank statements, of course, that's what we're doing.
Yeah. How long has a program like this even been out?
Yeah, good question. It's been out for a really long time. But I
Really?
think I'm right about, yeah, I don't actually have a number of years, but it's been a while. And it depends on the lender. So different lenders are willing to take different risks. And so some lenders really limit or don't do bank statement loans at all. And those lenders are generally the banks and the credit unions. They're a little bit more tight on their guidelines, not as flexible for the non-traditional borrower.
Sure.
Now, private lenders or alternative lenders who have only do mortgages, so independent mortgage makers or other companies will often use these abilities.
Sure.
So, yeah, really good question.
So I just, for that, you were talking about private mortgage lenders and then credit unions or banks. I was actually having a conversation with somebody the other day. Can you kind of run us through a quick scenario of why you would go with somebody like Fairway Mortgage versus the credit union that they've been going to for or banking at for 20 years?
Yeah, really good question. Generally, credit unions will specialize in a few certain loan products. So they're not going to have as much breadth. They also do a lot of other types of lending. And so they'll do your auto loan, they'll do personal loans, they'll do credit cards, all those types of things. And so oftentimes what I have seen for borrowers is that the process can be slower and not as borrower friendly with And so for a company like Fairway Mortgage, the company I get to work for, we exclusively do mortgages. And so we are truly experts. The process is really streamlined, but we also have literally hundreds of different loan options. And so that is really helpful for a lot of our.
I see. That makes more sense. So essentially it's more niche down. You're not working as a teller and helping customers like this is what you said. This is your bread and butter. This is what you're doing every single day. Your attention isn't being pulled a million different directions.
Yeah, and I am 100% referral. And so if I get business, it's because someone told someone that I do well at my job. And so that's really cool because I take a lot of pride in my service and my customer experience. And so does everybody really at my company. And so then we're motivated to hopefully make your experience just that much better.
Yes.
And yeah, that's like full picture for you. Yeah.
Sure. Okay, perfect. One more question on the bank statement loans. I recently attended one of your classes and you were just talking about like, this is what we can do with conventional versus a bank statement loan. And I'm kind of at the spur of the moment of the question for you, but do you kind of offhandedly like what is a big difference there? Because there are some more restrictions to bank statement loans versus just conventional.
Absolutely. So a few of the pros. So of course, you could likely qualify when you may not qualify at all for a traditional mortgage. But you also are not likely to have mortgage insurance with most of our bank statement options. So we have multiple different types of bank statement loans, but lumping them all together, you generally don't have mortgage insurance. You get a conventional appraisal, so that's pretty friendly. And then you can also buy investment properties with the bank statement loans. So that can be kind of helpful too. Yeah. We also have certain bank statement loans that exclusively use the self-employed borrower's income. So for example, I have a borrower who's a self-employed general contractor, but his wife is W-2 and works at one of the colleges, and we couldn't use her W-2 income for the bank statement loan. So then we went with a different type of bank statement loan, and you can't combine them. So it's just about knowing like the nuances of, is this the right option? Is there a different option available? So there's a lot of pieces there just to be aware of, and we're who has hopefully done a few of them before. The drawbacks generally, they do come with a little bit higher interest rate. It's a higher risk loan to us as a lender. And that higher interest rate ranges from 1/4 to 0.5%, maybe up to 1% higher than you do generally need a minimum of 10% down with the traditional product you can usually buy. And then there is a little bit more paperwork in terms of verifying your business, that cash flow within your business is likely to continue. Just extra underwriting guidelines around that. But then the addition or the flip side to that is yes, there's more paperwork, but we can do it up front. And so we can actually fully underwritten for your approval, so that once you start shopping for a house, it won't feel any different than if you were going.
Right.
So that's really nice. It's a little bit upfront work, but it's awesome.
But isn't that something that you typically do, Hailey? You do try to get it through full underwriting before you start looking for homes, which is so beneficial for anyone who's kind of just joining or getting into buying a home. Most of the time when you talk to a bank, a credit union, or a lender, they're just going to hand you a letter that says, we're pretty sure that you can buy. And then you may go under contract and give your earnest money. And then the bank comes back once they've actually looked at all of the things. And they're like, oh, actually, you don't qualify, which is so devastating for all parties and all the time that's been put in. So I think that is just a huge perk of one of the things that Hailey and Fairway does is really prepping you to succeed in purchasing a home. Hailey, if you have anything to say about that.
We do not like surprises. Surprises in the lending world are generally pretty negative. So we want to iron it all out. And it does cost us as a company extra money, extra man hours to get a fully underwritten approval, but there's no extra cost to the borrower. We pride ourselves being a really smooth process for our clients, and part of that is to be fully underwritten. And then we actually have an extra layer to that process for most of our borrowers who qualify is a cash guarantee. So if we fully underwrite your file, all of the pieces are there. Your income looks good, your assets are in the bank, and your credit is solid, then we will guarantee to the seller when we put an offer on a house that verify that house if for some reason you disqualify yourself between the day you write an offer and the day you need to close.
Wow.
So there's no extra cost, but it is 100% confidence inspiring for the seller. And the best part about a cash guarantee with Fairway is that it competes with other cash offers. And so especially as we go into the spring market, I just get so excited to go off that. My buyers can beat out cash offers without trouble, so without actual cash.
Wow. I didn't even know that, so I learned something new today.
Yeah, it's a really fun product, and again, you have to have all your ducks in a row, which many borrowers do. It's just not every borrower does. So we can chat, per scenario.
But I mean, hey, that's what you're there to help with, right? And so many things that people just didn't know. So, I mean, I feel like I love our calls because we could just go a million different directions. And honestly, I think we could talk for over an hour. But to stay on bank statements all day, is there anything else that you wanted to touch on there that you feel is important for people to know?
Yeah, just like closing out the bank statement loan side of things. So we have bank statement loans, which is awesome, but we also have in kind of that same vein 1099 loans. So if you're doing contract work, for example, I just talked to a borrower last week. He is a financial advisor and he's paid 1099. And so we're going to go the 1099 route, which is nice. I have had a dentist previously who worked for 1099, doctor who was 1099. So those types of jobs where you're not technically self-employed entirely, but along those lines. So we do have options for that. And then the alternative, or one more in that same vein, is a debt service coverage ratio, which is a DSCR, which is for investors who are buying investment property. And so that you can qualify based on the property qualifying, and less so. So helpful for those who want to invest in more real estate. So,
that's huge.
We have a lot of things, and you don't have to be an expert, thankfully. I pride myself in learning more.
That's why you call Hailey. She knows what she's talking about. Well, anything else that we should know that's going on in the lending world that would help possible buyers succeed in this market?
Yeah, really good question. I cannot think of anything else at the moment besides that I'm seeing pre-approvals picking up. So if you are excited about the spring market, do jump on it sooner than later. I offer soft credit pulls and not just hard pulls. And so I have lots of borrowers who are jumping in with a soft credit pull because they're pre-pull. So you don't have to worry about holding back and waiting for a hard credit pull. So that's something I know a lot of.
That's such a reminder. I was actually talking to a client the other day, and they were worried about private mortgage insurance. And they're like, if I could just have a couple more months. And I'm like, but in a couple more months, we're already seeing the market start to tick up now. And they're already a solid buyer, but I think that can just come down a little bit as the market picks up, right? And if you can't keep up with the cash that's needed, it is better to buy now. And you have to look at, it's so easy to look at the short-term picture of like, if I just had a couple more months. But if you get the house now and you get it for a good deal and you're comfortable with that, private mortgage insurance is not going to break the bank. And the equity that you're going to get in the long run is going to benefit you far more than waiting a couple more months and possibly missing out on a good deal or a home that you love. So I would just encourage people like, well, I'm really working on saving, but if you could get in now, which is kind of the conversation that we had last year as well, where rates were still a little bit, they were up, but there were good deals on the market, and some people took up on it and others didn't. And so here's another opportunity going into the spring market, and this is really where a good lender comes in. If they say that you're qualified and you can buy and you're comfortable with the monthly payment, I just really encourage people to look at the long game, the big picture. Don't get too stuck on little things like private mortgage insurance. Hailey, anything on that?
I feel like we need to do a little call on like private mortgage insurance and homeowners insurance. There are so many new and different things about those. So I'd love to chat more about those too.
Well, that was all I had today. I think, again, a really great call and so much to be learned here. If anybody has questions, you can reach out to me or Hailey. Her information will be below. Otherwise, we'll catch you on the next one.
Thank you.
Bye.